Hello everyone, welcome back to How to Trade. I'm Shane Vernier and this is the 9 EMA with RSI confirmation workshop. Today, I'm going to show you exactly how to trade this powerful strategy, and we're going to do some variations and some different ways that you can trade the 9 EMA. We're going to get you set up with everything that you need to hit the ground running with this strategy. Now, we've got some more videos in the works for the 9 EMA, so stay close attention to our How to Trade Calm YouTube channel, and you'll, if you subscribe, you'll never miss a video. But we definitely wanted to do this workshop today. It's been a while since I've covered the 9 EMA exclusively, and it's a powerful strategy. It's one that's very popular. It's one that a lot of people have reached out to me over the past 6 months since we've done this. Did the video on YouTube, and it's an exciting strategy. We're going to trade it live today. I'm going to show you exactly how to set it up and exactly how to trade it. A lot going on in the markets. Towards the end of the stream, I'm going to go ahead and I have to break down U.S. oil. I'll do that at the very end of the stream because the market is a big-time mover and a shaker, and there's just a lot going on. So good to see everybody back. A lot of familiar faces, a lot of new faces. Claudio, good to see you, Claudio Daramola. Lita, always a pleasure, Lita. I trust you're doing well. Bobby Bob, nice. Good to see Bobby back. Dedicated trader. I'm confident that you're making some great strides, Bobby, and all the best in the trading. Let's see, Tuku, always a pleasure, Tuku. All right, guys, we're going to go ahead and just get into this. We're going to do this workshop. We're going to break down exactly how you can trade this thing. Well, we should have you up and running in about 20 minutes. So if you just want to kick back, relax, and take a look at the strategy, that's great. If you have any questions at all, I'm going to try to answer them in real time, but I'll probably end up answering them right after we're done with our run through because I want to get everything set up and everybody on the same page. That's for sure. Let's see, Bobby Bob, hi coach. Where can we get on get in on WTI, and how has that created a new market structure? Yeah, Bobby, I'll cover WTI probably towards the end of the stream. So that's what we're going to do. Let me see. Braden, are you seriously streaming here? Yeah, we're always streaming here. Stream here probably about 3 times a week at least. Absolutely, Dermot. All right, guys, let's go ahead and do it. I think that we're going to be in a great position here to make a little bit of money on this stream. Every time it seems like we trade these strategies live, we always make a little bit. So I'm excited about that. All right, let's do it. Let's get on with the program here. Remember, if you want to trade anything, go ahead and dive into switchmarkets.com. They've got thousands of global markets. They've got incredible bonuses, everything you need to get up and running, 3 easy steps, relatively simple. So check out Switch. If you need a broker, they can definitely get you going. So the 9 EMA, this is what we're doing today. It's going to be a nice, tight workshop. We're going to do our best to deliver the information as quickly as we can. And if you have any questions, like I said, be sure to ask. It's a workshop. Let me see. Zeal, hello from India. Yeah. How are you? Always a pleasure. Okay, guys, this is what we're going to do today. We're going to set up the 9 EMA on TradingView and MT5. That's the first thing we're going to do. Then we're going to do some trade executions. We're going to be looking at the U.S. indices because right now those are on fire. I'm going to be trading futures contracts as I typically do. And what we're going to actually have happening should be a little bit of cash. I think we're going to make a little bit of cash here. And then RSI confirmation. I'm going to add some RSI confirmation on very short time frames using our futures contracts. We've done very well with that in the past. And then Fibonacci entry. I'm going to touch on Fibonacci entry, but probably going to have to save that for another time. That's a bit more advanced. Let me see. Ramesh, good to see you. I'm excited to have connected. Me too, Ramesh. Do very well. Okay, so let's go ahead and get started. Let's set up the 9 EMA on our TradingView and MT5 platform. So this is what I would like to do for right this minute. Well, we'll start with TradingView. TradingView, relatively simple to get the 9 EMA up and running. Now, one of the best things about this strategy is that it is user-friendly. So right here, if in fact you're going to be doing this, you just cursor down to moving average exponential. Go ahead and give it a click, and you'll see that it's been added to our chart. So let's go ahead and open up the settings. Right here, our inputs. All we have to do for this is go with a length of 9 EMA. That's it. So your period is going to be 9. We're going to base this off of the closing value. Now, that's typically what traders do. That's sort of the industry standard is the close. Personally, I use a lot of different settings, but for the purposes of this workshop, we're going to stick with the close. Don't worry about the smoothing. Leave all that on default and just go with a straight 9 on the close. Our style is going to be relatively simple. We're going to color it blue. I always recommend color coding your indicators because you want to make sure that you know exactly what you're looking at the glance of an eye. That's what an indicator's for. Okay, and then we just hit OK. So there's our 9 EMA strategy. Now, what is relatively simple about the 9 EMA, and it's all in our video that we have on YouTube here. It's got about 125,000 views or so. Check it out. It's on our YouTube channel. But what's great about this strategy is that it's easy. Now, basically, ignore the RSI for right now. This is what the trades look like. You're looking essentially to sell beneath that level, and you're looking to buy above the level. That's it. That's a basic RSI with no confirmation. That's as easy as it gets. So if we're going to trade this Euro USD, this is a daily chart. Now, the RSI does functions well on dailies, weeklies, monthlies. Dave, good to see you. Dave, welcome. It functions well on a bunch of different time frames. What we're going to do today is that we're going to use it to scalp, but I always recommend the shorter the time frame we go, then we look for confirmation, then we look for our RSI, and we're going to go over that in just a second. But let's go ahead and see what we got going here. So our Euro USD, essentially, it's as simple as when we break above the 9 EMA and get a bar close above that, you're going to go ahead and go long. When we get a bar close beneath this level, then you're going to go ahead and go short. So remember, you've got to start somewhere. You've always got to start somewhere. So your trading session has to start at a specific time. And also, if you're a swing trader or an investor, you've either got to start at the beginning of the month or the beginning of the year or whatever. You got to start somewhere. For the sake of this argument, I'm going to go right here. You can see that you had a buy signal crossed over the 9 EMA. You broke over the 9 EMA right there, and your buy was an absolutely beautiful thing. Okay, great. Now, you did get a bar close right there. That would have been your sell. Okay, so you'd have been on the short side of this market right now. Now, what is important about building a trade, all right, and we're going to use this short trade right here as an example. Now, remember, every trade has 3 parts, okay? It's got 3 distinct parts, and we talked about this yesterday when we executed that orb trade using U.S. equities. Every trade's got an entry point, every trade's got a stop-loss point, and every trade needs to have a profit target, okay? Now, there are a couple different ways to do this, and this is what's going to make you a successful trader using something like the 9 EMA. You're going to have to be very, very smart with where you put your stop losses. You're also going to have to be smart about where you put your take profits and your profit targets. So let's say right here that you want to get involved in this market, and you say, all right, I love this sell. We love this sell. How did we want to execute it? Well, you're going to go in right on that bar close. Basic 9 EMA. This is as simple as it gets. You're going to sell right there. Bar closed beneath the 9 EMA. You're going short. Where does your stop loss need to be? Now, a lot of traders are going to say, well, I'm just going to put it right above my signal bar. Now, on a daily chart, you could probably get away with that because we're talking swing trading. We're talking short-term investing. That's what we're talking about. I really prefer to lean on market structure in this case. I prefer to go above this swing high for a sell or below the swing low on a buy. Now, the reason why I do that is because I believe the price action of the market needs to dictate what exactly we're trying to do in the market. Now, if you're an American football fan, then you'll get my next analogy. There was quarterbacks in the NFL that made an absolute fortune just checking the ball down and getting 4 or 5 yards on third down. Check the ball down. If there's nothing there for us, don't force it. Trading's the same way. Don't force it. Not every trade is a 1 to 10 payoff or a 1 to 20 or a 1 to 50. If you want to do that, go trade options. We're making some videos now about options. You guys are going to love them because it's about how you can take a little bit of money and make them big. But for trading, I want to take what it gives me. I want to take what the market gives me. And the only way I can really figure that out is if, in fact, I understand what the market's doing. Okay, so I know what happened right here. Euro USD Bank. A couple days ago, we got a big spike right up there, right around 1550, 115.50. Okay, that's the high there. I know my entry's down in here. What am I looking for? I recommend in the EMA video, the 9 EMA video, that you only, well, not only, but you risk, or you're looking for a minimum of a 1-to-1 risk versus reward. A minimum. Now, with 9 EMAs and EMAs and crossovers and things, you probably should be thinking more like 1-to-2s and 1-to-3s. But here's what I think. Take what the defense gives you. What's going on here? Well, we know that if we took this sell, we've got a couple of things to contend with to the downside. We know that this area right here, this spike low, pretty good support zone. So we're going to have to take that out to get a big move. And we also know down here, this order block down here, maybe is going to be the next port of call. This chain is what we call very thin. So if we do take this short, we're looking to fill this in and maybe make a little bit of money to the downside. It's that simple. I like market structure. You can approach this with fixed risk versus rewards as well. We're going to do a little bit of both here, trading a very tight time frame. And let's go ahead and get it going, all right? I'm going to go on over to probably one of my favorites. And a lot of people really love this market. A lot of people really hate it. I always pick the NQ, the E-mini NASDAQ futures, and I take it right down to, say, a 15-second or a 1-minute chart. Let's start with a 1-minute chart here. Now, the reason why I'm doing this on a short time frame is to show you exactly how to execute these trades. There's no ifs, ands, buts, or coconuts. That's why we're trading a 15-second or a 1-minute. We're going to a 15-second here in a second. A 1-minute chart here on the NASDAQ. Very, very volatile. Very, very volatile market. Reason why we're here is because I want to show you how to execute a trade. You can see right up here, we've got longs, we've got shorts, we've got a million trades unfolding in a given day, okay? So let's go ahead and take a look. What do we want to do here? Well, if I'm going to trade this 1 minute chart on the NASDAQ, I need price right now on this 9 EMA to break above the 9 EMA. As soon as it breaks above it, then I can sell it. Unfortunately, the market's coming off like a bear. So what can we really do to get a trade here? All right, I'm interested in just getting in. I just want in. I just want to get in. So we've got a 15-second chart. You can see this right here, right on the line, is a great example of trades you don't take. I want it to be obvious. I want every break to be obvious with your 9 EMA. If your bar close is right on that line, forget it. Forget it. It's got to be obvious. If it's not obvious, you don't need it. Now take a good look at what's happening here. This market's absolutely falling out of bed. We're not going to get a trade for quite some time. Right now, we're waiting on the bounce. We want the market to bounce back, cross above our 9 EMA, and then we're going long. Okay? Then we're going long. Are we going to get that opportunity? Maybe. Maybe in a few seconds, maybe in a minute or so. Maybe something like this. All right, let's go ahead and check another one out. Let's go ahead and go to our YM. This is going to be your EMA Dow 15-second chart. Same type of thing. Okay, now we're starting to get a little bit of a bounce here out of the Dow. Really a heavy down day, off about 300 points. So the intraday trend is definitely down, but it's not the end of the world. We were down 700 earlier. You've seen a nice bounce back. So right now, right this minute, with our YM contract, with this E-mini Dow, we're looking to buy. Now, I want to buy. When am I going to buy? I'm going to buy when we get a bar close above our 9 EMA. Now, we're getting close. Let's go ahead and give this maybe another 15 or 30 seconds potentially to get our trade. If not, we've got to move on to other topics. I can't sit here all day waiting for this thing to set up. All right, we've got 4 contracts ready to go. I've got a market order on a buy. I want to buy as soon as we get a close above that EMA. Now, take a good look at what we have happening here. This is very important that everybody sees. I know it's not the biggest picture in the world. What happened? We went right to the 9 EMA, and now we're starting to struggle a little bit. Okay, right here is going to be our buy. Okay, there's our buy. There was our crossover. We're now long. Now, what do I want to do with my profit target? I want my profit target up, but more importantly, I want my stop loss. Now, my stop loss needs to be realistic. I can go right beneath that swing low, 15-second chart. I would put it right down there beneath the macro swing low. That's going to be my out. Now, right now, we're getting burned. No question about it. This is very tough to do. We're executing it on a short time frame, and we're putting it down according to the basic rules of the strategy. Right now, it's coming down. It looks to me like we're going to get knocked out. We're fighting a trend. We need to see the market get blown up a little bit in our favor. Right now, it's just going away from us, and what we're going to have to do here is probably going to have to go ahead and get out of this thing once we get stopped. Once again, your stop loss needs to be just a few ticks beneath your swing low. In this case, you don't put it right on the swing low. You don't want to do that. You want to give it a few ticks just in case you get a bounce back. So right here, we're on life support. It looks to me like we're going to get knocked out of the market. We're not quite out yet. That's why you give it a few ticks. And then right here, it looks to me like we're going to get nailed. Okay, we're nailed. We're out. Okay, we're gone. Losing trade. Right there was our stop loss. There was your break. Very difficult to do on such short time frames unless you have a secret weapon. And that sort of brings us to our next sort of our topic here, which is going to be how can we improve the efficacy of these trades of something like a real short time frame YM trade. You can see right there, bang, we broke, we got stopped out, we're gone. And it happened fast. How can I improve my efficacy? Well, we've got a way to do that. Add the relative strength index. Now, the RSI is a powerful tool. We've been using RSI a lot on our live streams. Over the years, I've found RSI to be a very, very simple tool. And what it is it essentially shows you where the market is overbought and where it's oversold. And it gives us an idea of whether we want to buy or sell a market. So let's get back over to our chart right here and take a good look at your YM contract, your E-mini Dow. What can we do? Well, the first thing to set up this RSI is you go right to indicators and you go right down to your relative strength index. Something like this, okay? Now, your relative strength index. I get this question a lot, people that watch the streams. What are your inputs? I leave them exactly as they are. We're using the default settings that Wells Wilder Jr. built this strategy for. Now, or built this indicator to use. 14 is going to be your length. Source is going to be the close. You leave everything the way it is. What do we have here? We were in oversold territory. This right here would have been our buy. So let's go ahead. Let's buy it again. Let's try it again. Right there, we were in oversold territory. Price was beneath 30. That tells us that the market maybe is bottoming out a little bit. And we have an opportunity maybe to ride this trade back up into the center of our range. And there it goes. Okay, there's our pop right there. Where do I want my profit target and my stop loss to be? Okay, right now, if your stop loss, let's say, is right down here, we know that that's about 40,303. We're long from 347. We've got to be looking for at least 80. Something like an 80. I mean, and you know, the math is what it is. Let's look for an 87. Now, that would be a one-to-one payoff. We would have an opportunity there potentially to make a little bit of money. Now, if we were serious and saying, Shane, what about market structure? What do you think could happen market structure-wise? And I would go right here. I would say this order block here, probably not to be ignored. What about this order block right here? That's a pretty good one too, 40,416. That puts us in business. Right here, the market's going in our favor. There's no question about it. The only question for us is where do we want to take our profits? Now we're up. I mean, the trade's going our way. It was a good one. This one we got into a runner. Okay, right there, it broke our way. I'm going to go ahead and I'm going to flatten the position and take the money. Now, why did we just take the money? Number one, it hit our profit target. It was a one-to-one payoff. Really a beautiful trade. We got in. We got the money back. We just lost. That's fine. The second reason why is because it wasn't really worth sticking around for another, 30 points. Maybe. But take a look at what price action's doing. Now it's blowing back up in our face. This order block, this market structure right here, 15-second market structure, is acting as robust resistance. So I want everybody to really understand. We just executed 2 trades on the same market. What happened on this trade right here? We got beat. RSI was telling us to do it too. Look what you had right here. RSI was down around 25, 26. We were in oversold territory again. We took that buy and we crushed that trade. I recommend that if you're going to trade short time frames, something like a 15-second chart or a 1-minute chart, adding the RSI. I'm going to build an entire video on this. So I show you exactly how to do it on multiple platforms. Now, I was hoping that my functionality for my, my MT5 would come up. Unfortunately, it's not juiced into our streaming platform, so we're not going to be able to go over the entry on MT5. I did show you how to add the 9 EMA on MT5 in the video on YouTube. Check it out there, and I'll be sure to do that on our next video as well. So that essentially is the 9 EMA with RSI functionality. Now, it's not necessarily the easiest way to trade. It can be very difficult if you're trying to scalp this. Let's go ahead and adjust our time frame and adjust our market. Let's go on back over to our NASDAQ. You can see right here, RSI confirmation, absolutely beautiful trade. It was a banger. Basically the same trade let's back off a little bit. Let's go to a 1-minute chart. What do you got here? Now, I want everybody to notice a couple of things. Number one, 1-minute chart. That's 4 times as long as a 15-second chart. That range is that much bigger. That's that much more pricing information. What did you have here? Right there, oversold territory on the relative strength index. Beneath 30, we're on a buy. Right there, we're looking to buy. Boom, there's your buy. It's been a pretty good trade so far. If you were serious about this trade and you wanted to really commit to it, that would be your stop loss. Your entry point would have been. I hate would have beens. I like doing things live for you guys, but we're just trying to engineer these trades. I would be looking at that order block right up there, potentially, as being your profit target. Will it work? I don't know that. But my trade has 3 pieces to it. It's a sound trade. I've got a good entry point. I've got a technical basis. I've got a nice volatile market. I've got a profit target and a stop loss. That's all I need. If you make trades in a disciplined fashion, you're going to be just fine. You're going to be just fine. Okay, guys, I got way behind on the live chat. I'm going to answer some questions, and then we're going to go hunting for some more trades. I'm going to show you how to use this. We're going to save the Fibonacci discussion for another time because it does take quite a bit to really unpack the idea. But we do have a video up on YouTube that does just that. All right, let's have a look. Let me see. Hi from Nigeria, Afolabi. Good to see you. Andreas P. Hello, Shane. Long time. Good to see you, Andreas. Welcome back. Let me see. Norman, hello, connected from Zambia. Good to see you, Norman. Welcome, welcome. Raymond, what's the length of the 9? Yeah, the 9 EMA, the periodicity is going to be 9. That's for sure. Just 9. Addy SA, channel growing steadily, Shane. Keep going. Oh, I don't know. I just hope everybody gets something out of these live streams and the videos. That's why we do it. I'm not too worried about growing much of anything. Let's see, Bobby. Can we take a 9 EMA on a gold 15-minute time frame with RSI indicating we have oversold? Okay, Bobby, let's go ahead and take a look. Let's go right back here. Let's go gold 15-minute time frame. Remember, you can trade this on any time frame you want. All right, so right here on a 15-minute gold chart, 9 EMA sell. Okay, your RSI doesn't have you in oversold territory. So the RSI is just sort of right around the middle. So if you were using RSI as confirmation, no, you wouldn't be able to to take this trade if you were using RSI to confirm. Now, if you wanted just to trade the gold using the 9 EMA on a 15-minute time frame, then you'd be on a sell right here. But be very careful doing just that, especially on shorter time frames, because what happens is like right here, you would have had a sell, and then right there you would have had another sell. And as long as your stop loss is where it needs to be, which is right up there, then you're going to be okay. I mean, you still got a position. As far as gold, let's go to gold futures though. If you guys want to scalp a little gold, let's go to a 1-minute gold futures chart and see if we can't make a few bucks here. Okay, this is interesting. RSI confirmation. The low right there was 30.13. It's not low enough, not quite an oversold, at least not on the minute chart. If in fact I wanted to go ahead and send them just without the RSI confirmation here, we could certainly do that. And let's go ahead and do it. We've got gold futures. Let's go ahead and let's put 4 contracts down. I want a market order. I want a market buy. Now, the reason why we're using a market order is because I want to get in instantly, right away when my is so I can get in on a potential breakout. So we just bought the market, okay? We just bought it. Was it a good play? Was it a bad play? I don't know. Broke above the 9 EMA. Okay, now we're going positive. Where's my stop loss need to be? Needs to be right around there. Right beneath that swing low. That swing low's down there at about 33.15. We bought in at 33.19, 4 contracts. This is a big trade. It's not too big for maybe a prop account. If you have a $50,000 prop account, you could use this kind of leverage, but I recommend keeping keeping your risk exposure between 1% and 3% per trade. Now, I will give you up to 5%. Nobody else on the internet's telling you to do that. I'll give you 5% risk of your total capital on one trade. I'll look the other way because I'm an aggressive person myself, and I like to make money, and I view a lot of times putting risk down. Sometimes you need to put a higher risk down. I don't know that this is one of those times. We're trading a 1-minute gold chart, and it's not the best time to be doing that, but we've got a trade. So right here, we've got our stop loss locked in at about 314.9, somewhere in there. There's a couple of options for my profit target. Number one, I could go just 1-to-1. Right there, you're looking at about 319. We're in at 319, so 314.9. That's about, what, 40? So we'd have to be looking probably at 23. Something like this would have to be our profit target just to get a 1-to-1. Now, you can see on this 1-minute chart, it's probably about all I would be looking to do unless you wanted to shoot for the top of this market structure that occurred right around that U.S. Open. And if you're going to do that, just understand you're going to be going along for the ride, meaning your profit target's going to be up here somewhere right around 33.28, and you're going to be looking at more along the lines of a 1-to-2 risk versus reward, which is a healthy trade. Now, right now, it looks to me like we're going to be in trouble here, but we're okay. We've taken the risk. We know what the risk is. We know where our stop loss is. We've assigned 1 to 5% of our account balance to this one trade. We know where our profit target needs to be for us to make a little bit of money here. Believe me, people make worse trades every day. Every day. Do we believe that this long is going to come in and cash in? I don't know that for sure. Let me see Tim Brown from Australia. Good to see you, Tim. Welcome. Let me see Deepanush. Can anyone mint money in option buying? Tell us something about RSI reversal at 30.70. Please, I am in a heavy loss. I I'm not sure. Heavy loss. This trade here looks like it's going to lose. But can one mint money in option trading, option buying? I'm looking at options now. We're going to make a few videos on options. Sort of definitely an interesting discipline. There's a lot of money in it if you get it right. So right now, this market's turning against us. A couple of things we could be looking at doing. A lot of traders that trade something like a 9 EMA, when they get a bar close beneath that 9 EMA, they exit the trade. They cut that stop loss off as fast as they can. I don't like to do that. I like to keep it simple. There's an old saying, KISS, K-I-S-S, keep it simple, stupid. I think simple is always better. And when you start moving your stop losses around, you better know what you're doing. You better know what you're doing because it can be a real tough road to establish consistency. Right here, we've got our trade down. We're going to leave it. See exactly what happens. All right. As far as the RSI goes, RSI is simple. Don't let the RSI concept buffalo you. Don't let it intimidate you because it just isn't that hard. RSI is a mathematical calculation where you basically are taking a moving average of the price action that's happening up here, and you're building an envelope. You're assigning a primer to it. You're trying to establish a level where it's relatively oversold. That's going to be beneath 30. Or if it's overbought, it's going to be above 70. When the RSI is above 70, you're going to be looking to sell the market. When the RSI is below 30, you're going to be looking to buy the market with the idea that the price always returns back to a mean value. Okay? Now, the problem with just trading RSI without any other indicators is that in a trending market, you will see price, when we get into overbought, like right back there, we should have been on a sell, and price just explodes to the top side. A lot of times when a market's trending very heavily, then you'll notice really extended periods where price remains in overbought or oversold territory. I do not recommend just trading the RSI by itself. That's why we've incorporated the 9 EMA to give us a way in and out of the market with a structured fashion. Think of the RSI as a way for us to gauge whether we should be buying or selling, and the 9 EMA is our trigger. Right here, here you go. We were very close to oversold, 30, right around 30, and now this market's breaking back in our favor. The real question is what do you do? Put yourself in this position right now. This is a very important part of this workshop. I can teach anybody how to use an RSI and use the EMA. This right now is what you've got to have in your mind is going to make you a successful trader. What you do right now. Put yourself in this position. You're up $80. You're up $160. The market's still above the 9 EMA. We've got a profit target that's up there about another $4, 40 ticks. It's not that far, but it's far enough to make us sweat it. Our stop loss is down there. What do we do? There's no reason to get out of the trade yet. In my mind, I'm looking at it. I go, I'm up 160. I'm up $160 right now. I could spend that money. I could use that money. Oh, no, now I'm only up 80. Now I'm even. Oh, no, now I'm down. Now I'm getting hit. Now I'm down 500. I should have got out, right? You can't do business that way. You'll drive yourself crazy. All of that inner dialogue is what we call conflict. And if you're having that on every trade, you're a conflicted trader, and you're setting yourself up for big time troubles. Believe me, I spent years as a conflicted trader. I did okay. I just didn't do it anywhere near what I could really do. All of that stress and all of that conflict goes away if you practice proper risk management. I know, let's say I bet 5% of my account. Let's say I have a $10,000 account and I got 5% on this. So 10,000, bam, 10,000 times 0.05. I know that if I lose this trade, exactly how much money I'm going to lose. I also know that if I win, how much money I'm going to win. My profitability at that point just becomes, how successful the strategy is. My winning percentage, that's all. But if you start pulling the plug prematurely, or if you find yourself moving your stop losses up and just taking small loss, that's fine. There's nothing wrong with that. But you're really going to hamstring yourself, especially when you're trading like this. This is a structured, systematic approach. You got to stick to the system, and you build everything in with your risk management. Now, there's some other nuances that are going to take you to the next level, trading strategies like this. Being able to read market state, understanding which markets you should be focusing on. I mean, the market's broken our way, 520. Aren't we glad we just didn't stop ourselves out down there? Maybe, maybe not. It could reverse and blow up in our face and we lose. The bottom line is the bed's made. The noodles are in the pot and they're boiling. It's over. We got the setup. We identified a market we wanted to trade. We got our time frame. We got our setup. You pull the trigger and you walk away. Do we win? Do we lose? I don't know. It looks pretty good right now, but it doesn't look great. We didn't get the big runner already. This could easily reverse and blow us up. But even if we lose, it's within the framework of what we're trying to get accomplished. And that's what keeps you in the game next week, next month, next season, next year, the year after. Think about it that way. If you do, it takes the pressure completely off of you. And that's what this game's all about, is pressure. All right, we're going to let that one simmer. Pretty good collection of trades. I have no idea if this one wins or not. Do I care? Of course. I always want to be making money. I hate losing. Puts me in a bad mood. But let's wait and see how this pans out. Okay, I promised to cover WTI crude oil, and that's exactly what I'm going to do, and then we're going to go ahead and sign off. Let me see, Addy. I'm struggling to get out of the break-even stage because of that conflicting trade. Well, Addy, it's a great question. We'll get back to the analytics here, but it's a good question. The conflict is real, and it's in all of us. And where the conflict stems from is our attachment to money. Now, I'm not going to sit here and try to be a guru saying, oh, man, you just got to let go of your inhibitions and all of your wildest dreams are going to be yours, or they're going to come true. I'm not going to say that because it's not true. As traders, we have to be disciplined and hyper-vigilant, and that means that we can't let go. We don't give away our money easy, and we don't put it in harm's way easily. However, if you find yourself moving your stops to break even all the time, and you find yourself just sort of in a scratch situation, or what I call commission trading, that's when the broker makes all the money and we don't make any money, then you've got to make an adjustment. Now, you've either got to adjust your profit targets and bring those in a little bit and maybe tighten up your backside to begin with a little, your stop loss a little bit, and work on just hitting those real conservative targets. That's eventually how I fought my way out of it. It's really hard, though, when you're looking for 1 to 2, 1 to 3s, and 1 to 4s, and you see them go up 1 to 2, and you say, no, I got to stay the course here. I got to stick with it. I got to stick to my guns to try to get the big payoff to make the whole thing worthwhile. I got away from that kind of trading because it's inevitably the market would go in my favor, and I would sit there and I go, I'm a genius. I'm the best trader ever. I do this all the time. I'm a pro. I know what everybody else doesn't. And then the market would come back against me, and what would happen? It would go negative a little bit, and then it would bounce up, and then I would just exit at break even. I'd say, well, I'm not doing this. I'm not playing this game. Very, very difficult for these markets to go up and hit a big, lofty profit target in a straight line. Markets don't move in straight lines. I recommend if you're hitting a lot of break-even trades, I don't mind that you move your stop loss to break even, but maybe bring those profit targets and make them a little more reasonable. That could be a way to do it. You could also start managing your trades according to time. I know when I'm scalping my range numbers, my own personal approach to the market, my levels, I know if I don't get paid off right away, I got to bounce, because that means something's wrong with the level, or the levels of participation aren't where I need them to be, and my opportunity at success is dropping. My odds are dropping by the minute. So I know from personal experience that the longer I sit, the more trouble I'm in. Eventually, you just got to work through it. Addy. All right, let me see. Third TV, a 1-to-1 ratio. I started with a 1-to-1. That's what I like to do, but you don't have to. And with 9 EMAs, I recommend probably using market structure or a minimum of 1-to-1. 1 to 2s and 1 to 3s are probably going to be better for you. They're going to show you that you can make more money. But I like winning more, so I stick with 1-to-1s. Does it work? Well, I don't know. I've been dancing with these markets since 2011. Let me see. J Hope, good to see you, Jay. What length is the moving average on the RSI? The standard 14, best to keep or reduce to 9. Yeah, just went over that one, Jay. I leave them. Let's just go back over it real quick. The RSI right here, I leave them on the factory settings. RSI length is 14. Sources close. I don't do anything with smoothing. I don't do any of that. Add it as a separate window beneath price action. A lot of folks use RSI as a chart overlay so they can see price with regard to where the RSI is. I don't like doing that. I like separate windows. And I like separate windows because I'm old and stuck in my ways. All right, guys, let's take a look at U.S. oil. I do want to cover this one real quick, and then we'll go ahead and check out our pet rock. Our gold really isn't doing much of anything. Okay. This is sort of a chart that I probably should have got it tattooed on my back or something, or went to CNBC and said, hey, I got something hot for you guys. Most analysts in the world have this market wrong. It's not their fault. They just weren't really around trading crude oil every day like I've been. That's a lot of months. That's a lot of age. I mean, that's a significant portion of my adult life right there. Going back to COVID, COVID was the most significant event to ever hit the crude oil markets ever. I put it over the 1970s embargoes and things. The crash that we saw in WTI crude in April of 2020, price did not go to zero. Didn't go to zero. Went to negative $40 a barrel. There was nowhere to put the oil. The world stopped. So if there's nowhere to put the oil, what's it worth? Well, we can't store it. It's not worth anything. It went negative. You had to pay people to take delivery of your oil. It's crazy. That's where the bottom of this range, this COVID craziness range, all the way up to the euphoric highs, the panic highs of when Russia rolled into the Ukraine. That's your macro wave. That's your range. It's funny. It's not on this chart either. This level I've highlighted over the past several months as being the biggest level in all of crude oil. We scalped it 6 ways to Sunday. 64.50s were beautiful on a number of occasions. But I always maintain that once that support zone gave way, we're not just going a little bit lower. We're going a lot lower. And I stick by that. Even though May is buying season, I don't believe it's going to develop. I think that even though today we saw a 2.7 million barrel draw in our EIA crude oil inventories, and we're 6% below the 5-year average for U.S. supplies, and you've got a budding trade war with Canada where they're going to attempt to turn the energy off to sort of twist the U.S. arm to get the tariffs removed, you're still bearish. Why are you still bearish? Because it's all about potentially a recession developing. We'll talk more about that Friday during U.S. NFP. And it's also about what we believe is going to happen in the United States energy industry. And we're looking at having a major boon on oil and potentially large supplies hitting the global markets. That means prices fall. Where do they fall to? Now, Fibonacci retracements, I've probably drawn a million of them over the years. If you were trading pure Fibonacci's on that macro level, you would believe that price is going to go to, say, $45 a barrel. That would be the next port of call. Once this level broke, boom. I don't think we go that low. Maybe in the fall, maybe next winter. I would be shocked if this would be a full-blown crash, something like we haven't seen in a long, long time. Is it possible? Of course it's possible. Is it probable? No, it's not probable. So if you do get this sell-off down here, of course we're going to be bidders at 45. I see price sort of testing big round numbers. I'm a fan of those. 55's big. 52.50 is going to be big. 50 is going to be big. So I would say, right, you've already tested 55, 55.15, and then bounce back. Do we go back down there? Yeah. So I'm bearish. That's sort of the long way of me saying that I'm very, very bearish here. So the real question is how can I sell this thing? There's your weekly. One of these days I'll figure out how to use this, I promise. So there's your weekly chart. Here's the Fibonacci's that we had on our weekly that we were looking to sell. Didn't quite get up to where we wanted. We wanted to sell 65s. Loved it. Didn't get there. Big down week. You're off about 7.5%. Trending south. Where do we want to sell from? I want to sell in any place I get a chance. So right there on your weekly, let's go to our dailies. Do we have an opportunity now to sell? It's like a 3 black crows pattern. Suggests that we're going much, much lower. Markets don't move in straight lines. I'm a net seller from 60. Sell there. This is probably the premium sell. That's where the Fibonacci's line up, right up there, right around 6150. So looking to sell right there in front of 60s, 6150. Those are pretty good shorts. The question is do you get them? Let's go to the 30-minute chart. There's your sweep. That's a big sweep. Right here was your news bar. EIA news, bang, bang, rally, sweep lower. So there must have been an announcement or something that I didn't see. If you're an intraday trader, your pullback sell. Trend is down, no question about it. U.S. oil's off almost 3%. That would be your late day sell for the next 50 minutes or so, up until about 2:30 p.m. Eastern. Be very, very careful, though, that last 5 minutes of the session. 2:25 Eastern, I'd probably be on the sidelines watching. But if you could get that now, 58.75 in the next 25 or 30 minutes, that would be your sell. Intraday scalp, probably looking for 10 to 15 ticks. It's definitely doable. All right, let's go ahead and check in on our gold trade, and we'll get going. Well, there it is, 800. This right here, guys, prima facie evidence why moving your stops can get you hurt really bad, especially on 1-minute charts. Our stop loss is beautiful. Now, if I was serious about my trading and I was scared about taking my loss, you could go right there with it. You could. I'm not interested in that. I'm going to leave it right there. As soon as we hit 33.23, close that puppy out. Maybe we get it right now. We're up 920. I mean, this leverage isn't there's nothing wrong with exercising this kind of leverage on like a prop account. 4 contracts is nothing. I trade 4 contracts live on gold. It can be done. So you're up about 920. What do you do now? Got to be patient. Got to be patient. Yeah, Malaysia, I just showed you the RSI setting, man. I'm way behind on the live chat, about 7 minutes. RSI settings are 14. Leave them 14 on the close, and you leave the rest of them on the factories. All right, everybody, I'm going to go ahead and let this thing roll. I think we're going to hit it. Should we close out? Close out with a win? Leave on a win? I don't know. I think we're going to hit 33.23. I don't really see much. There's no reason to get out. You take the money. Yeah, we better rack them. All right, there you go. There's a nice move for you. 32.22, 21. It's choppy up there. It's all about what you do, how successful you are. Look at we were up about 1,000. Now we're up 760. A lot of action up there. A lot of action. Yeah, we'll let it go. Let's go ahead and recap what we did today. Let's go account history. You can see we had a nice long position right there in the YM. We got hit right there. That was our first loser when we didn't really get the RSI. 15-second chart though, so we showed a net loss there. I don't know. Let's go ahead and flatten it. Flatten this one. And now we're way up about 560. So we turned a profit, about a $300 profit on 3 trades, 1 and 2. Not real great. This trade right here, though, probably should definitely be looking to wait that out until it hits your profit target. All right, everybody, I'm going to go ahead and sign off. My throat is finished for today. I want to thank you for joining us for this workshop. I always like doing these. These are fun workshop Wednesdays, but we'll definitely be back with more of these. Check out our How to Trade Calm YouTube channel. A lot of videos out there. We put one out last week on trading trendline reversals, and pretty much nobody's watched it. So if you guys are interested in trendline reversals, go ahead and check that out as well. And I think we're going to have another video out next week on how you can choose the best strategy for you. All right, everybody, I'm going to go ahead and sign off for right now. So we made a few $100, but all in all, that's how you trade the 9 EMA. We'll be back with probably another 9 EMA workshop showing you how to use Fibonacci retracements on nailing your entries, and that's a bit more advanced subject. We'll be looking to maybe see how you can turn some of this risk versus reward in your favor. All right, everybody. YT, take it. Absolutely, we took it. All right, D-Pan, good to see you. Thank you. Lita, always a pleasure, Lita. Bobby Bob, and to everybody out there, I want to thank you once again for joining the workshop. Feel free to go back and check it out on demand. It's everywhere. Okie doke. You guys have a fantastic session. Trade the action well, and we'll talk soon. See you.